Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got a little bit of a dip to the downside, now bouncing potentially off of the 618 of this diagonal pitch fan we've had price in since January. Let's go ahead and take a look into the liquidity of high block. What is high block, you say? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are, so let's do it now. Oops, got to log in here. Just 1 second. Don't know why it logs me out now. That's weird, but okay. All right, so let's first start with the 1 minute time frame for BTC. So we were getting a little bit of rip into that liquidity down below. Let's go see with the max liquidity filter on what is that amount. So they came down to that 220 million and cleared it.
Fatality.
And then now they are V-shaped, recovering into those $100 million characters of the 100x shorts and their 50x brethren.
Fatality.
Gotta pay yourselves as you go. Currently 4.5 billion imbalance to short liquidity to recover on the upside here for the shorts that are open and in profit. So let's go ahead and expand our vision to the higher time frame pools to see which ones we hit. Okay, so on the wait, is this also needing to be set? Yes, it is. So we came down into the thicker pools at 37k, and there is still some thicker pools down at that 36,350 region, which they may be inducing for a V continuation into a C wave down below. So we may be seeing our way down, pardon the pun, into this 36,350 region. And yeah, it looks like the 3-day has a little bit more liquidity to grab to the downside. I know a lot of YouTubers were putting out like 40k projections to their audience from Monday, which was irresponsible, but hey, if they want to trap their audience, they want to trap their audience. That's cool. So if there is still that 34k sweep that we could be seeing inbound, and also there is the double-digit pools starting to form up at 38.7. The acceleration to go from 36 down to 34 is massive. They would have, eventually they will leave some short pools in profit. It's the nature of the beast as they fatigue on the higher time frames. The higher time frames obviously draw to the downside on the 3-month, 6-month, and 2-year. We go over it every day, so we're going to just speed it up a little bit because I have to go soon. So let's go ahead and make this short and sweet today. I think it'll be an easy analysis perhaps. So let's go first into total and turn on the momentum. Coupon code over there, link in the description for more, momentummaster.info. Arguably one of the better suites available in my humble opinion. Got some rocket ships and things, stochastic array, trend cloud, and baseline. These 3 components alone make it worth it, but you got all sorts of things, multiple time frame screeners, and so on and so forth. So the daily cloud, we were looking at this 12-hour cloud potentially shifting here. We came beneath it with acceleration. We were talking about possibly accelerating to the downside. We did, came to that level. And now what is happening with total? So I know we have the 6 hour and the 4 hour and some time frames to want to take off here, the 4 hour most notably. 12 hour could suppress this takeoff if we don't hold the line here at this moment in time. The daily time frame could be continuing to the downside. This could be a B trap. It all depends on how high of a bounce we get. Getting a few $20 million insertion of money here from, what is it, 361 billion, wait, 21 billion, sorry, $21 billion insert of finance. Could be just a stop hunt if we look at the total 3. Let's go see. I was noticing something after the stream. What am I doing going to this garbage? So I was noticing something after the stream that lunacy and what was it? The USDC was getting a huge rise. So what is the whole USDC burst that had 325% on USDC yesterday? Overall, seeing green for the week for a lot of coins. Rose, say, lunacy, blur, uni. I wonder what the whole lunacy thing is about. It is lunacy that people still trade lunacy, but to each their own. If you go to the total 3 here, you are getting a possible B retrace to continue lower. We're also looking at the USDT dominance, which did burst above this 12-hour cloud. Can you maintain it? We did maintain that cloud closure above the cloud. Are we going to start to see this shift and coming up above here? Bitcoin dominance also taking over here. This narrative of the USDT dominance rising alongside the Bitcoin dominance does insinuate that dump idea. We are at the precipice, getting that 12-hour cross down event. So these cross down events are not to be ignored. We do have ones that play out and play down and play up and play possibly down. These cross down events of the baselines are why I turn my opacity of the candles down. Candles do show you what price is doing, but overall, if the bullish nature of a candle closing above this baseline or beneath it shows fatigue, which is backtestably true, there's a reason to make this prominent in conjunction with the baselines and whatnot. And we had some lovely day yesterday. We were trading in the group yesterday, had some nice trades, one of which being 150 ticks or so for a long, which we were looking at using our system. So bullish divergence is real, as is smart money concepts. You can't refute one without recognizing the other. All right, so the 6-hour cloud did come down to the super trend and held it here. We're going to make our usual descent through the time frames and bid you adieu. I have to be out of here in less than 15 minutes. Got something to attend to. So, alarm on the Williams here for the daily time frame. This alarm cross does bring with it potential downside. The last time the alarm hit, we dropped about 6%. So are we going to get an alarm cross event cascading to suppress the stochastic here with the Williams? This is a back-tested true level with the rising sun event down here, which played out, as you see, rising sun, boom, to the upside, and alarm event. will this play out? We are also at the precipice of that cross down event we talked about for the 3-day. Let's just highlight this for you. There is a possibility that this baseline crosses down. We said watch out for it in the next 6 days about 2 days ago, so we're about 4 days away. We got two days here, and for this candle to close at this 706 trapdoor, and then potentially we will be accelerating down further. The last time we had a cross down event like this was back here in July 24th, and sure enough, boom, to the downside. Cross up, boom, to the upside. So these are not signals that give you so much false signals here. We have a few over here, but ultimately paying heed to cross ups and cross downs. Especially after a big move like that, recovering and retracing is not abnormal. It's not even bearish, it's just natural. Okay, so something to be mindful of in the next few days. And this daily time frame, possible suppression of takeoff. It is showing lackluster strength. The money flow did come back up to the RSI, so you could taper here on the daily time frame. Daily time frame ambiguous, if not bearish. 22 attempting to bounce off of the cloud here, but could reset at the 50 level, ambiguous, if not getting suppression from the Williams, slightly bearish. 12-hour time frame, money flow beneath the RSI, suggesting that you could get a bounce. Ultimately, you have the mixed signal of the downside cross of the baselines and the stochastic coming down on you alongside the Williams. Ultimately, slightly bearish in tone. 6 hour. 6 hour has the cross down event that we were talking about yesterday with the arrow, so saying watch out in the next 5 hours. And sure enough, or that was Sunday actually. Sunday we were talking about the cross down event, which occurred and brought us to the downside, and this so far is suppressing the price. You're attempting to make a flip of the baselines here by closing a candle slightly above this thin one and the cloud, so you could be getting a cross up event. I'd watch how this candle closes in the next 5 hours for that London session. The 6 hour coincides with London and New York, so that's why it's a good time frame to mind. A little bit of tidbit there. The 4 hour also starting to get a burst up with the money flow beneath the RSI. Williams in an oversold state. This is the one that is trying to have its vestige of hope of turning things to the upside. This is where we start to take a look at the liquidity and where they are aiming in terms of their V-shaped into the liquidity here. 37,534 is a range which has some stacked liquidity, 37,534. So if we go up to that 37,534 range, we could fatigue up in that 534 region up here. They did a good job doing fair value trading within these ranges as they dropped it, so they're possibly coming back to a lower time frame fair value gap here. This ABC played out, so I'm going to delete it. Congratulations, but we must move on to the future. Hourly time frame. Hourly time frame, getting this rising sun event, money flow beneath the RSI, getting overbought, but could bring this up. Would be surprised if this RSI comes down for a furious. There are rare occasions where the RSI does come down to the money flow, as it did here. But for the most part, if you get money flow above the RSI, it comes to the RSI. If you get money flow beneath the RSI, it comes up to the RSI. So it's coming up to potentially this region. There must be some sort of gap in this region on a lower time frame. Let's go lower to the 15. There's one up in here, but it's not really a fair value gap because there's not 3 candles, but there is a untraded zone up at that 37634 region. Let's go ahead and see if 634 has something up there. 655 does. Yeah, you have some bands up in here, but overall not so much in that region, other than to just come up to that candle for the sake of coming up to it. As of this moment, you have the 15-minute cloud giving you a little bit of that upside momentum as we broke through, coming back and kissing the cloud if it's genuine at some point, coming back and kissing and possibly coming to this region. One of the interesting things yesterday, how quickly we were giving a breakdown of Link. I just want to go back to Link really quick. Yesterday we were catching this breakout and then just showing how the math, the deviations of the math lock in where it wants to go. We were showing this $8 million character came up to that and continued higher up into that 1618, and we were saying ultimately watch out for the short. We said the short was most likely the real play, but they're just coming for one last liquidity grab, so watch out for your alts rather. And they just did that stop hunt drop. But interesting little insinuation of that, how they held the cloud. Don't trade against the cloud and you win. Here would have been the probabilistic one here where it goes even further down. Trade with the cloud, you are in profit. There are 3 Japanese strategies which are valid, which were inspiration for this cloud. One being, so there's one Heikin Ashi, everyone always knows Heikin means average, so it takes the open, the high, the low, the open, the close, and averages it. That's what Heikin means. Heikin means average in Japanese. So Heikin Ashi candles are a valid strategy after all these hundreds of years since the Japanese invented candlesticks. Another is Renko blocks, which is stacking based on price, not time, and just how many units sold. They stack blocks that represent the price differential, and that's a valid strategy as per what we use here on NinjaTrader. But there is also number 3, which is Ichimoku, which means one cloud, and this is kind of a cloud system that they use. I don't know Ichimoku, but this is a hodgepodge, back tested to be true system as well, with the cloud on your side. So anyway, fatality. I like the evening stream. Rainier streaming anymore? Rainier is doing the NQ. I don't know if you got the link to the Discord. Let me give you the link real quick. If you're in the Discord, you can see what he's up to. Hold on one second. Here we go. Paste. All right, there you go. Free Discord. And then we can pin this. There we go, message pinned. So yeah, you can join that if you haven't. He posts basically NQ these days. Funded accounts are interesting because you can link up accounts using a copy trading system, and then whatever amount you make times however many funded accounts, if you're accurate, you can split up your risk to ruin ratio. For example, if you have a 50K account, you're only allowed $2,500 of drawdown, which if you're using minis is not that much. So trading micros and then splitting it with like 5 or 3 or whatever number of 50K accounts is whatever your reward times that amount. And the risk per trade you say is let's $150 per trade, you're only risking 6% per trade. There's a risk to ruin ratio of 15 trades before you blow it. So you have a reasonable chance to get to pay out with a huge reward at the end, potentially, if you're accurate. So that's what the whole NQ futures path is about. And we're basically doing that inside of here in Momentum Master, and also when you're talking about all of these plays with NQ. So it's a different beast, but it is full of liquidity and it'll get you quick at trading and making decisions as BTC percolates. So I like BTC as a pet project, and NQ is more like in the moment, locked in, set, like do it and then close it out afterwards. You can get in and out of a trade in a few minutes. It's very fast. You got to be quick to cut. All right, so BTC on the 5-minute, getting some overbought signals here on the Williams, could possibly fatigue out, come back and retrace into this order block. You have some fair value gaps within this downside path that we took yesterday during the London session that we're retracing back up into. These retracements are basically what is basically this what to look for going into the fair value gap, filling in the liquidity void and continuing on your way. So this is one thing to watch out for this level here. So we did come up to this gap and filled it in, and we could be coming down into this region. Do we have a reaction at this region or not? That is something to watch out for. Ultimately, I'm overall bearish on the market. These are some other levels we could come up to. If this bounce is true after this region, we could be coming up to this. If we have, let's say, this trend-based fib, let's just say this is downside, okay? Then we come up to the upside here, wherever that top is. If we break that 706, then we could be accelerating down into these regions. So there's both projections for you. You could come down and accelerate down to this recovery of this wick, which I would like to see for a healthy retracement idea. All the hopium bulls can get wrecked. And yeah, so this is your small projection of a scalp off of the 618, but overall the draw could be to this downside path. We are currently at the 706 trapdoor of the bullish trend-based fib. If they're over leveraged, people will cash out at this 37,305 region and accelerate to the downside. The last time that acceleration happened was here, Monday, November 13th, and we just took it all the way down to 34.8. So we could easily go sweep all that again, and I would not be surprised. In fact, I've been saying we should have that sweep to the 34K range yet again. And the curvature of the 12-hour cloud does suggest it. It wouldn't be immediate. It would be something like you break the cloud, you come back, you bearishly retest it, and then you come back down like this. Ultimately, you have this cross down event on the horizon for the 3-day, and you have the cross down already happening on the 12-hour. And the daily baselines have been holding, so this baseline expresses the fatigue of the momentum. This is why we put value in it, because there are 3 pillars to trading: liquidity, math, and momentum. The momentum should not be ignored. Momentum is a thing, and it is a type of trading style. Smart money concepts can be intertwined within it. You don't need to be mutually exclusive. They don't need to be mutually exclusive. So yeah, ultimately we could be coming down, reacting off the 618. Watch out for that. But if not, then we could be making our jolly way to the downside. This is Tuesday, November 28th, and that's my story, and I'm sticking to it. Essentially coming down to here. At some point, the hourly time frame is overbought, and money flow is coming up here. You could see that suppression and continuation idea, but overall liquidity down below screaming to be grabbed. So let's watch out for that, shall we? All right, do you have any requests like link or anything like that? I got 2 minutes. I'm in the Discord, just haven't seen him in a while. Maybe I don't have his notifications on. Yeah, he has his own, whatchamacallit, like channel over here, official charts and ideas. I think he posts every day, and he also has a section of videos. He's been making a lot of videos, so you can read about the video stuff. So I think that's what he's been focusing on, his attention, just like actually live trading in the evening. We were live trading last night in Momentum Master Discord with NQ. We had a nice little run up. This was the play of the day for me here. It was basically a $400 move up and then just stopped out in profit. So yeah. All right, well, ladies and gents, that is my story and I'm sticking to it. We could be retracing down to this gap here. You could watch for a reaction at 37K, if not acceleration to the downside, and possibly continuation into some of these pools below. So that is my story and I'm sticking to it. And thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire of the act.